The S&P 500 finally came up and filled the June 10, 2020 gap. Been bouncing around for about a month between that 3,000 and 3155 level. So now, since the gap is filled, is it time for the S&P 500 to make toward the all-time high, or will it break down and head back toward the March 2020 low? So in this S&P 500 analysis, we're going to analyze the S&P 500. We're going to also review the stock market sentiment and the stock market internal to see what they are telling us on what the S&P 500 might do. Also, at the end of the video, we're going to analyze the emini Nasdaq 100 future and see will it continue to make new all-time high, or has it topped out and it's getting ready to break down. So be sure to watch the entire video to find out what are some of the price level to watch for the Nasdaq 100. So in this index chart, you can see that the Nasdaq 100 and the Nasdaq Composite continue to close at all-time high. But all the other indexes, such as the New York Stock Exchange Composite, the Dow Jones Transportation, Dow Jones Industrial, the S&P 500, and the small cap Russell 2000, still pretty much confined in this consolidation range. So on this weekly S&P 500 chart, you can see that it is still continue to creep higher toward the all-time high and toward this megaphone, top of this megaphone channel that started back on March 2009. And if we zoom in, we can see that the last week's range is the smallest of the last 7 weeks. So basically, it's an NR7 candle, and the range is only about 71 point, or a little bit under 2.25%. And also for the week, it closed up just a little bit under 57 point, or 1.82%. And if you bought the low, the March low, then you essentially gain almost 995 point, or 45%. And if you held on from the high to today, you basically still losing 206 point, or 6%. And on this daily S&P 500 chart, you can see that last week it actually came up and closed this gap here, this 3181.49, finally closed the gap after a little bit close to a month of time spinning around here. So we'll take a look at the S&P 500 in more detail later on. But first, let's go and take a look at the stock market sentiment and the stock market internal. And looking at this sentiment chart here, you can see that the VIX is still within this neutral zone between the 30 and the 20 level. Right now, it's pretty much in the neutral area. It's not too fearful. It's a little bit of caution in the market. And also looking at the put-call ratio. The put-call ratio is closed on Friday at 0.6. It is under this 0.75. And it is not down in the 0.4 area, although earlier in the week it was down at the mid 0.4, but it didn't stay there for too long. So right now it is also kind of in a neutral zone. Basically, the market is not too optimistic and not too panicky. And looking at the up-down volume ratio of the New York Stock Exchange, you can see on Monday when it went up, the up-down volume ratio is 3.53, and then on Friday, when it shot up, 1%, and the up-down volume ratio went up to 4.89. And the advanced decline on a daily basis, on Friday, there were 1,592 more advancer than decliner. And on the Monday advance, it was 1,207 more advancer than decliner. But on Wednesday, it was only a measly 451. If you look at the Tuesday, when the market dropped a bit, there were 1,591 more decliner than advancer. And also on Thursday, another down day, there were 1,444 more decliner than advancer. So from this, on the advanced decline, you can see that there is still a lot of selling pressure on a down day than buying pressure on the up day. Although on Friday it did come up a bit, but it should really be at the 1,800 to 2,000 area when you have a S&P 500 close up a little bit over 1%. And here looking at the New York Stock Exchange new high, new low, it didn't really do much. It's still pretty subdued at the low level here on Friday. It closed with 64 more new high than new low in the New York Stock Exchange. And looking at the AD line from the New York Stock Exchange versus the S&P 500, you can see the persistent in the negative divergence. Similarly, looking at the Nasdaq market on the new high, new low, we are not seeing much of an expansion, especially looking at the Nasdaq 100. It's making an all-time high here. So as it continue to move up to a higher level, the new high is not expanding, and that is a red flag. Looking at the Nasdaq advanced decline line, you can see that it's continued to make lower high as the Nasdaq 100 is making all-time high. So from the sentiment and the market internal, the S&P 500 and the Nasdaq 100 are trying to move to a higher level with less strength. Unless the new highs start to expand and also the AD line negative divergence get resolved, the market is vulnerable to a major reversal here. So now let's go and take a look at the price action of the S&P 500. So looking at the S&P 500 on the daily price chart here, we see that the index came up and filled the gap here on Monday. It tried to get above it on Tuesday and it failed. So it stayed down on Wednesday and Thursday, and then on Friday, peak above it and closed really above this gap low here. Last week, we were talking about the upside scenario in which that it will come up to this 3214 and possibly back test this gap level and then push up to the 3259.81 and into this gap here, then try to work on filling this gap. So right now the index did not quite make it up to this 3214. For the coming week, we basically will continue to follow this upside scenario to see would it be able to clear the gap and move up to the 3214 and possibly come back and back test the gap level here, the lower trend line of this price channel, and then get a bounce up to the 3259.81 and see would it be able to get into this gap and try to fill this gap. Once this gap is filled, then we essentially be eyeing the all-time high. We also have to keep an eye on the potential of a retracement back and break this channel and come back down and retest this 3130.97 and then work itself back down to this 61.8 level near the 2934. First is to come back into this consolidation area and possibly retest this area near the 3000 level. Then if it can hold, then we're basically looking for this thing to work itself down to possibly into this 2900 area. And looking at this S&P 500 ETF, the SPY, we see that it's still unable to completely fill this gap yet. It's also, basically it's still shy about 50 cents or so. On Monday, it came up as high as 317.68, and the gap, this candle's low, is 318.22. We're essentially still looking for this to come up and fill this gap and move up to the 320.16. Then possibly come back and back test this gap and then push up. And if we could take out this value area high, this composite value area high above 322.29, then we'd be looking for it to come up to this 325.85 and essentially get into this gap here. If it could not get up to this 322.29 and move through it, then we'll also be looking to see would it be able to hold this composite point of control here somewhere around 311.66. And if it could not hold this, then we're essentially looking for this thing to move back down. This is the balance area, and there is this small gap here somewhere near this 295.48. Looking for this thing to come down, see would it be able to hold this level and get a bounce back up. And if it doesn't, then we're looking for it to come down and fill this gap, possibly at 295.48, then work itself down into this gap between 291.95 and 286.21. Now let's go and take a look at the FAANG stock, then we'll take a look at the emini Nasdaq 100 future, the NQ. So here you can see the chart for the FAANG stock. The top one is Facebook, Apple, Amazon, Netflix, and Google. So let's go and take a look at the individual stock. Facebook, it closed at a all-time closing high. Earlier the week, it made a all-time high. Apple did not make a new all-time high on Friday. It did close at a new all-time closing high. Amazon, likewise, it also closed at a new all-time closing high, along with making a intraday all-time high. And Netflix, and it made a new intraday all-time high and closed at a all-time closing high. Google finally made a new all-time high on Friday on intraday basis and also closed at a new all-time high. So as you can see, all the FANG stock essentially closed at a new all-time closing high, and that's one of the reasons why the Nasdaq appears so strong on Friday and also for most part of last week. And before I actually go and take a look at the E-mini Nasdaq 100 future chart, let's go and take a look at the tweak that I put out on Thursday. So after the market closed, I essentially put up the post this chart here on the E-mini Nasdaq 100, the NQ, and essentially saying the free money gang keep pumping the FANG stock to push the Nasdaq market up to all-time high, and one just wonder when and where this will end. So let's go and take a look at the chart a little bit more detail. Here the latest E-mini NQ, the E-mini Nasdaq 100 future. Right now it's bumping up against the top of this channel. I have a Fibonacci retracement here set up between the swing, and here are the extension, the 127, the 141, and the 1618. So right now it is sitting right above the 127, and as you can see, it's also at the top of this price channel here. So there's two possibilities for the near term. Is one that it continue to hug this price channel, move up to this 141, that is essentially around 11,062, or it could come back down and find support near this 10,224 area at the lower price channel supporting trend line, and then get another bounce up. Or we could look at a potential breakdown if it break this channel and come back beneath the 97.67, this pivot low here. So those are the level to keep an eye on in the near future. If it go parabolic, then we probably will see 11,700, and we probably see a climatic move. Thank you for watching. I hope you find the information in this video informative and useful. Stay safe.